Okay, there you go. Let's try this again. Can you hear me now, folks? Can you hear me? You can't hear me. Music was fine, but you can't hear me. How about now? Can you hear me now? Okay. All right. So let's start over again, folks. My name is Hugh with a question for you. And just saying how it's so complex trying to get this together first thing in the morning, first thing in the evening here. We're in the evening now. It is 9 o'clock Eastern. Actually, say just after 8 o'clock Eastern time. A little messed up on the weekend here. But anyway, there's a questions box. Please use the questions box. You'll find a little icon on your Zoom dashboard. Click on that. I am the only one that sees that, so go ahead and ask whatever you want. And we'll get to the questions later, right? So the my question to you is, are you new to options? If you are new to options, punch up Y or yes. If you've never heard of options, let me know. If you are familiar with options, then say no. Otherwise, I'm going to see how. Okay, so we have. All right. Yes, yes, yes. Okay, I'm just looking to see. Okay, most people here are. Alexi, you're not new to options. I know you're not. You're not a trading room, buddy. Okay, maybe we can skip over the intro to trading. Gene, okay, here's a few yeses coming in. Few yeses coming in. All right. Da, da, da. Okay, lots of no's, a few yeses. All right, we'll quickly go through the options primer, okay? Because I know there's some people who are new to options, but I'm going to give you a second here first to read this standard disclaimer that we have to put up there to keep the lawyers happy. Okay, I'll give you a couple minutes to just, actually not a couple minutes, I'll give you about 10 seconds to read this. Okay, meanwhile, I'll get caught up on some of these comments that we've had up here. Okay, wow. Can't believe all the people that are online here tonight. It's a very busy night tonight. So, okay, zoom on that one. Okay, and I just need the Q&As. There we go. And the number of people here. How many people we have? Participants. Oh, lots of participants here. Okay, you alone are responsible for all your own trading, and past performance does not guarantee future results. All right, there we go. Let's get back to the action here. So, folks, want to talk a little bit about who we are, why you should listen to us. I think most of you probably know the story. I come from a corporate background and learned how to do this myself when my own financial advisor blew out half my account. My name is Hugh. Most of the stuff I teach, I learned from the trenches, and it works for me. When I started making some serious money in the markets, that's when people started, some people started to coerce me into showing them how to do it. And that's the rest is history. That was 2010. We are now in our 14th, 15th year of doing this, live trading room, the whole works, teaching people. So it's been pretty good. Like I go for the breakout trades, looking for multiple trades a day, just make small amounts. Kind of like, you build a house one brick at a time, right? And it works very well for me. It works for a lot of people. So rather than trying to go for the big trades, those big huge winners, I like to just go a little bit at a time and multiple trades. Plus, it's a lot of fun. All right, it's just a blast. Aaron is the my co-host. He's been with us now for a couple of years since Eagle Financial Products bought us out a couple of years ago, and Aaron is now with us, and he's also in the trading room in the morning. He goes after the deep dive analysis and maybe longer term trades. He'll dive into the deeper dive. So sometimes we agree, sometimes we disagree, but usually both of us are right if you just wait long enough. We're both very good traders. We've been doing this a long, long time. Combined experience, we have over 40 years. Over 40 years combined experience in trading. Today, what we're going to talk about here tonight, I'm going to give you a little bit of an introduction to trading. Where did it go? Oh my gosh. I think my PowerPoint's a little messed up here. Hang on, bear with me. To be discussed, options primer, what happened recently, the upcoming week, your challenges, answer your questions, and your next steps. All right. I just noticed that whenever I snap away from the PowerPoint, my picture freezes. And it's funny how my picture always freezes in the worst possible pose you can imagine. It's almost embarrassing. So I hope you're seeing it better than I am. But anyway, that's what we're going to talk about here tonight, right? So if you have any questions, please put them in the questions box. Folks, what do? We day trade SPY options, period. That's all we do. SPY all the time. SPY is the highest traded stock out there. It's affordable, diverse. All the sectors are represented in SPY. It's liquid. It's the highest traded ETF out there, okay? Which means there's huge profit potential. It's also very exciting trading. The fact that of liquidity is that it lowers your bid-ask spread nice and tight, okay? And you don't need a huge move to make a lot of money in SPY. I started out trading equities, of course, as I think most people do. They buy a stock and they sell it and hope to make a little bit of money. But I traded off just like that at the beginning, and eventually found SPY options, day trading SPY options, to be my best trade here. So what are options anyway? Options are actually contracts. It gives the options holder the right, but not the obligation to trade the underlying stock for a certain price by a certain date. All you have to know is two names, calls. If you expect the stock to rise, you buy a call option. If you expect it to drop, you buy a put option. Funny names, I know. Call up, put down. Options have strike prices. This is the set price at which the stock can be traded for if and when the option is exercised. They also have expiration dates, the end date at which the contract expires. Okay, these do not go on indefinitely. Options is not like buying stock. The stock you buy and hold, you can do with it whatever you want. You hold on to it forever, will it to your kids if you want. Do whatever you want with it. But an option comes to an end. It ends, it expires, it just vanishes like you never owned it. And if you paid money for it, well, too bad for you, right? A couple of kinds of options here. There's in the money, out of the money, at the money. In the money, that's when the market price of the underlying security is above the strike price if you're buying call options. Obviously, the inverse is true for put options. Or below the stock price puts at expiration allows the options holder to exercise it profitably in terms of intrinsic value, right? Out of the money, that's when the market price of the underlying security, SPY, the stock, is below the strike price for calls or above the strike price. If you're talking about puts at expiration, becomes worthless. Pros and cons. Pros, all right, trading options has a lot of flexibility. You've got a lot of different strategies that you can invoke that you can come up with and use. It's very cost efficient, huge leverage. That's what I like about it. The leverage is huge, which gives you a very high return potential. Many strategies available, and it's also fun and exciting trading. There are some cons to trading options, obviously. There's the time decay, and you have to pay commissions. And of course, it is risky business. It's risky, okay? I'm not going to kid you. And if you don't know what you're doing with options, you will lose your money. All right, you heard that right. If you do not know what you are doing with options, you will lose your money. So it's imperative that you understand what options are, what you're doing with options. Do not just buy these things and expect you're going to make all kinds of money. You can. Not saying you can't. I'm pretty sure at the beginning when I started trading that I had some good days and bad days. Most of what I learned from my mistakes. Um, in fact, that's what I learned mostly from. But I'd go looking back and I'd say, well, how is it that I thought this is a great trade yesterday and today it's a piece of garbage? What happened between yesterday and today? I try and go and analyze the trade, and I'd always learn something from my mistakes. That was sort of the objective with what I trade. But anyway, eventually you learn what works and what doesn't work. And in fact, we use one stock, one strategy, 1 hour a day, basically, a little bit, more or less. And over the years, we figured out, folks, what works in both trading and training. And that's why you're in the right place, because we understand not just how to trade, but how to convey the information to you as a beginner, or whether you are a beginner, an intermediate, or a seasoned trader. We know how to talk your language, right? So we became experts in both trading and training. Now, SPY is huge. It has a market capitalization of over $543 billion. That's huge. If SPY were a country, it would be number 26 on the list as measured by gross domestic product. That's according to World Meter. Folks, we're ahead of Ireland, Israel, United Empire, Arab Emirates, Thailand, Nigeria, Egypt, Austria, and a lot of other countries. Okay, if SPY were a country, it would be number 26 on the list. Why SPY follows the top? 500 US stocks, efficient use of analysis time. With SPY, you don't have to sit there for hours and analyzing various different stocks and sectors and different things like that. All you basically have to do is take a look at the economy, which way is the economy going, and figure out which way the stock market likes to run with the economy. The moves are quick. You can earn your daily gains very, very fast. SPY is also fairly reliable, consistent, and even predictive. And you know what? It's even quite forgiving. So if you happen to be in a bad trade, chances are if you've got time, you'll be fine. And that's one of the things we advocate. Make sure you buy some time. All right. Now we do some zero date expiration trades as well. Again, I don't advocate that to anybody who's new. That is if you are a seasoned trader and you know the risks getting into something like that, then it's fine. And if you're disciplined, you can make a lot of money doing zero days till expiration trades. So with Spike and probably you can anticipate markets prices in any market. You can make money both going up and down. And I want to make sure the disclaimer there is for this for this reliability, consistency, predictiveness, and forgiveness. Because I don't want to tell you that, well, you said SPY is forgiving and I lost money. And there are caveats to this, and I think you'll find that the enemy is not really the stock market at all. Once you get good at this, but you'll find that the enemy is actually the person in the mirror. And when I finally recognized that, instantly my fortunes changed to the better. Okay, I stopped blaming the stock market. The stock market is the stock market. It is not the one to be blamed, and I'll tell you why, and it's very easy to prove it. If at the end of the day you go back and look at a chart, say a 5 minute chart, or 1 minute chart or whatever, you'll see there are many opportunities that the market gave you to make money all day. Many opportunities. And if you were to take them all, you'd make, oh my gosh, I can't tell you how much money you'll make. But obviously, that's not the case. So you'll find that, yeah, it's actually the person in the mirror that is actually the enemy of the stock market, of your trading. And once you establish that and learn to dance with the market instead of against it, think of it like a dancing partner, okay? My wife was watching Dancing with the Stars the other day, and we look at things so differently. She sees it as such an art form and it's so beautiful and all this. I look at it like me with the stock market. The one dancer takes 2 steps forward, the other one takes 2 steps back. Next time, she takes 4 steps forward and he takes 4 steps back. Uh, and if you learn to dance with the stock market, and then and you take your five or 6 steps forward, and you say, "I think I'm tired. I'm going to sit down. I'm going to cash out. I'm going to take my profits." And market will say, "Okay, thanks. I'll see you the next time." Right? And if you just keep doing that a few times a day, guess what? You're going to make some pretty serious money, right? So that's the way to look at it. Why spy now? Well, folks, you're going to learn something new. You might as well stay mentally sharp. And that's very true. It keeps your cognitive skills high, right? And I can tell you, I talk every now and then. I talk to some people who are in their 90s, traders, and they are so sharp and witty, and they're right on top of their game. And I'm thinking, wow, uh, you can't get by these guys, it keeps you mentally sharp. I also know a lot of people who are, much younger. They might have stopped working at retirement at 65 or 62 or whatever it is, and they don't do anything. They sit in front of the TV all day, and their brain turns to mush. Oftentimes they die soon after, folks. Why spy now? Might as well earn while you learn, right? Time's going to pass anyway. Might as well make money along the way. Huge, huge profit potential. If you are serious, we can teach you how to make some serious money. And you can actually achieve that dream lifestyle that you truly, you crave, right? It's exciting and thrilling to beat the market. And what I like about it is you can pass your knowledge to your kids for financial security. I've got a couple of kids that know how to trade, and it's really liberating for me as a father to know that I don't have to worry about them because they know how to make money. Now, my daughter, she years ago she went to teach English as a second language in Thailand. Not to be the traveler, but she thought she'd get on the plane and go. And I so totally admire her for that. I don't know if I could ever do that, to be honest with you. At least not at this stage. Maybe I should. I don't know. But anyway, she never was a traveler. But for her to get up and go to this new culture, new language, new everything. And by the way, she made some very good friends there and loved it and just absolutely loved it. But she liked to go to these. She liked to go traveling, in her off times on the weekends and whatnot. And I'd always ask her, and through FaceTime, obviously we could chat fairly often. So I always stayed in touch with her, which is just really really nice. But I'd ask her, Alexis, how are you for money? She said, oh, well, you want me to send you some money? No, I'm good, Dad. I know how to trade SPY. If I ever need some money, she said the American dollar goes really far down here. So if I do need some money, not a problem. I'll just get on the stock market, do a couple of trades, bang, make some money, and there it is. And I mean that's just such a nice feeling for me knowing that they're able to piece it together, right? So, and I think this is really important. I love it when people do that. So, all right, why SPY? Well, why SPY now? That's why. Let's get on with the week's events. This is what the week looked like. And let's talk about what happened here. Monday was a low no news day. No new day. It was a new day. It was a low news day. There we go. Let's get the typo fixed. SPY retraced, took some profits because we had a pre-market gap to the upside. When it gaps up like that, you'll often find that it reverses, tends to fill in the gap. Came down, found some support at the mid 596s, bounced around a little bit in pre-market. Getting into Tuesday, we had a consumer confidence report, new home sales, Richmond Manufacturing Index, and the Feds released their meeting minutes from the last meeting. And there's a lot of positive chatter around that. And there's also some of the Fed members went on their speaking tours, and of course they talked up the market and mostly favorable. Pushed SPY through 601. We're pushing into some new highs, new high territory. On Wednesday, we had our personal consumption expenditure report, which is the Fed's. It's a key indicator for inflation. Came in at pretty good numbers. Chicago PMI unemployment claims, durable goods orders. These tested support when they fell down through to reclaim the 598, but then the market came back up after it had some technical reversal here. All right, we had a chart pattern. In fact, this is the beautiful. I'm going to just tell you right now that we have it here. Might as well, since since we're here. All right, this here is. I hope this works. There's your left shoulder. There's a head. There's the right shoulder. Right, and we came down here. Now here's the neckline. We had a couple weeks ago, I guess it would have been now. We had um, a workshop on chart patterns. For those of you who are in the workshop, you'll recognize this is a good place to make money here going to the downside. Now, this is pre-market, so you could not have traded options anyway, but you can still recognize that the patterns form. Now, we did come up here in pre-market, popped up all the way to this resistance level, which actually is a new high at that time, formed another right shoulder, and then when we came down under the neckline, this would have been your opportunity to make money on puts, right? So that's kind of what happened with that. All right, moving along. Thursday, of course, the stock market was closed for Thanksgiving. And my goodness, when I go back and look to see what I have to be thankful for, the list goes on and on and on. I've got an endless list of things to be thankful for. And I think an attitude of gratitude goes far, especially in this business. Brings humility into your life, you know. Anyway, Friday was a quiet news day. Not much happened. Ramped up to a new all-time high, folks. 603.35. All right, never seen that before. That was just before the market closed at 1 o'clock in the afternoon. They closed out the week and the month to a brand new high. So we're going to start December off with a new high. All right, we'll see where the market takes us. So. All right, now I think I'm going to go back here and erase. Let me see if I can erase these comments that I'd written in here. Trash, clear all drawings. There we go. This here, folks, is a chart of the seasonals. All right, the blue line at the top, that's where SPY is now. And the red line at the bottom is a composite of the last 5 years closing balance, an average of the last 5 years closing balance each day at the end of the day. So that's why the differential in price here. But let's take a look here as we move along with the stock. Okay, I got to close this off here. There we go. And let's zero in here, focus in on the seasonals. And I look at it historically, SPY rose 1 point over last week. And again, seasonally, SPY rose about 3 points the following week. So we're heading into the end of the year. There's going to be a little bounce, but I'm looking here at the end of the year. Possibly there's going to be, of course, we're going to have our Santa Claus rally. We'll talk about more of that on the next week or two coming up. So what happened this last week with Thanksgiving? You always have that feeling of, that Thanksgiving feeling, right? It's not just about eating turkey, but you got to kind of really look around and say, I actually lived the very best life I can imagine. Um, I wake up in the morning in a relatively safe spot where I don't have to worry about bombs coming down on my roof. I mean, there's so many things to be thankful for. I've got, good, clean clothes to wear, hot and cold, potable, running water. You know, I've got a, I've got a great wife and family and everything. No problems with kids, nothing like that at all. Financially secure. I have the knowledge to make a lot of money if I want. I've got food in the fridge, lots of gas and some late model cars. And I mean, I'm so much to be thankful for. And I think that feeling of being grateful with the stock market as well. It elevated inflation, even though it's trending down, which is good. There's multiple central banks easing monetary policies. We've got supportive of economic growth, labor markets, corporate profits. Everything is very is going quite well. We're chugging along quite well, and we're actually well prepared for what is to come in the future. We've got core personal consumption expenditure price index rose 2.8% over year in October. It's in line with expectations, maybe a little higher, but it's not bad. The broader trends remains intact, even if it's not a straight path. And relative economic resiliency we've got and growth prospects, a lot from the tech innovations that we've seen here and AI and whatnot. That helped equity markets hold the lead. And I am going to fix this typo here again. Who did this anyway? There we go. Get an E in there. Equity markets. Equity markets. There we go. Equity markets, of course, hold the lead, soaring over 30% in the last 12 months. I think that's pretty darn good. Here's a graph of what volatility's been like the last couple of years. Quite low. All right, number of daily 2% declines in the S&P 500. 10-year averages way out there. So actually we're quite low volatile days in relation to what it could have been here. Going back a couple of years when I talked to COVID years and whatnot, things were really kind of crazy. And the S&P has set more than 50 new all-time highs in 2024. And I'm sure there's going to be more to come. We still have all of December to come, so I expect more. And I think the last time Trump was president, I think we had something like 124, something. Don't quote me on this, something like that. Anyway, record highs in the S&P 500. So it appears that he is and his administration is good for the stock market. Mind you, we've had other highs with other presidents as well. Not to say that the others don't, but I think there's going to be some good economic results from the new administration coming in. So we'll see what happens. Here's what the S&P and Nasdaq and Dow did last week. We had an increase in the S&P 1.1%, also with the Nasdaq. The Dow went up 1.4%. Year to date, 26.5% for the S&P 500. The Nasdaq, 28%. Even the Dow's running over 19% year to date from the year. So coming up this week, what are we going to see? Monday, we've got the S&P Global final manufacturing PMI report and an ISM, Institute for Supply Management, manufacturing PMI report release. On Tuesday, it'll be the JOLTS job openings. And on Wednesday, we've got an ADP non-farm employment change report, S&P Global final services PMI, ISM services PMI, and Fed Chair Powell will be speaking. He'll be speaking. Let me just see what he's going to be talking about because that might have some bearing on the market. In fact, it probably will. Because whenever he speaks, the market listens and reacts. So that is coming up. What I say, Wednesday. Fed Chair Powell will be speaking. He'll be participating in a moderated discussion at the New York Times Deal Book Summit. And that's coming up at 1:45 in the afternoon. We'll see what he speaks about, but we're gonna see no doubt some market volatility coming in on Wednesday afternoon with that. All right. Thursday, not a lot going on, just some unemployment claims. And on Friday, a little more news coming out. Average hourly earnings, non-farm employment change, unemployment rate, University of Michigan consumer sentiment, and also an inflation expectations report coming up on Friday. As for volatility, I expect it might be medium on Monday and Tuesday, picking up on Wednesday through Friday. So we'll see what happens here. Trade carefully, folks. The SPY's testing major resistance levels. We could push up into that level and bounce back down. And that's the thing when you hit support and resistance. Those are areas where we're going to see some bounce at the least, reversals at the worst, and push throughs. So anything goes, right? When you trade, it's always nice to have a nice gap between where you are and the next major support or resistance level in which to grow into. That's where you make your money. When you're getting into these support resistance levels, to me, that's like it's like you're heading into a construction zone, right? Yeah, you might have to stop and wait for traffic to clear. You might have to stop and wait for construction equipment to clear off the road, or they might even send you on a detour, right? And that's kind of what a support resistance level looks like to me. So now, if things are clear and you're going full straight, and we saw this last week, it just pushed through a resistance, a major resistance level, like it wasn't even there on the one day. I thought, oh, okay, well, it had me fooled. So anyway, that's good, right? If you're holding call options, it's going up. Let's go, and away we went. So anyway, let's move along here. Okay, we've got many opportunities all day, and we show you how to spot them, how to trade them, and I'm going to get into the questions a little bit. Okay, oh my gosh, lots of questions coming down the line here. Okay, all right, and first, what are we going to talk about here? I want to talk to you about some of the services that we have. All right, I know some people are a little anxious on that. And so I want to talk to you about the signal. We have this thing called the Day Trade Spy Signal. A lot of people are not available to spend an hour and a half with us in the mornings. And I get it. You're still working, or you got to take the kids or grandkids to school or whatever you got to do. This is a wonderful opportunity to still get into the stock market. Let us do the heavy lifting. So this is an algorithm-based program. Is it 100%? Nothing is 100%. But the results of this day trade spy signal are very, very good. So what it is you're going to get a text on your cell phone, a particular option with which to buy. All right, you're going to buy this option and immediately buy it and immediately put it for sale for 5% target price. Okay. And then if it doesn't sell by the end of the day, simply sell it at the market close for whatever the market will give you. Now, those of you who are in our trading room and know how to move with the market, you can actually make a lot more than 5%. Okay, but that's the standard by which we run it at. And that's been doing extremely well. So the Day Trade Spy Signal is one of our services, one of our main services that we like to tell people. And it facilitates trading for those who are just simply unable to watch the markets all day. It comes in both as an email and a text message on your cell phone. Excuse me, while I cough. Next up, we have the pick of the day. Similar to the signal, but different in that you're going to get the pick of the day through an email before the market opens, usually around 9:20, 9:25. You should have it by then. All right, so then again, it's a particular option. Then this one you would buy right at the market open. Now, the pick of the day is a particular option that Aaron and I discussed before the market opens as to which way we see the market going. We find a particular option with which to trade that we are interested in. So when the market opens, and let's say the option is a call option, all right? So what you want to do is just wait for a few seconds for the bid-ask spread to settle in nice and tight, 2, 3 cents. Usually just, like I say, about maybe 15 seconds, that'll do it. Now, if the stock is, say the pick is a call option to the upside, but the stock is going down on the 1 minute chart, all right, wait until it starts turning back up. You see the pressure pushing it back up, then get in, okay? Then get in. and we like to put in a 6% profit target. Now, some people like to have a stop loss, so we suggested, okay, use a 40% stop loss. It's very rare that these options are stopped out. More times than not, I prefer to actually hold it overnight because there's ample time built into these things that should you want to hold it, you can. Okay. I also sometimes will repair these trades if need be, but the pick of the day has also been working extremely well. And most often you will get your 6% early on with the pick of the day. All right, so there's some differences between the day trade spy signal and the pick of the day. I also want to tell you a little bit about our inner circle. Now, this is a program. It's very good for those who are just kind of starting with this, want to get your feet wet, right? So you'd buy this, doesn't cost you very much, and you're going to get an email from us somewhere around 9, 10, 9:15, 9:20, the way we see the stock market unfolding for the day. All right. Actually, Aaron is the one that does this primarily. He sends out the email. It's like a flash assessment to the way we see the market shaping up for the day. So we analyze the market with all the inputs, all the various news feeds that we look at, Twitter, sorry, X feeds, whatever information that we have, right? And we put it into a big mixture, and we see, is it going to be calls or puts? Where is our propensity? Where do we feel the market's going to go? Why? What's happening? What's there to look for? Do we see a possible retracement first, then a move back to the upside? This is what is reported in on the inner circle, and then later in the afternoon or evening, we will give you an update as to what we actually did on the stock market that day, including our trades in the trading room. Okay. Also, with the inner circle, you will be invited to our Wednesday night meetups. Every Wednesday night, we meet up at 8 o'clock. It's an interactive session. You can ask questions and go over whatever you want. Aaron runs the Wednesday night sessions, and they're very good, very informative, engaging, and some even say entertaining. So, all right. So these are some of the services that we have. I also want to tell you about the trading room. This is our main service that we provide. Our trading room. This is hosted by yours truly, myself. Hugh is my name, and Aaron. All right. Again, combined over 40 years of market experience. All right. We know what we're doing. We know what we're talking about. We've probably seen it all. There's not a lot that we haven't seen in the stock market, okay? But I will say this, no two trading days are ever the same. But we've seen a lot of stuff, a lot of stuff. So I want to tell you that this is an area where you can take advantage of our expertise and pick our brains. All right. This is where strategies come alive. Every morning we get together at 9:20 Eastern time, go till about 10:30. Sometimes you might even go a little bit later. And we discuss the news that's going to take shape for the day and what items we're going to be looking for. And then come 9:30, the opening bell, then we look to execute our trades. Learn and earn from the best, folks. I don't mind telling you, again, we've been around the block. We know what we're talking about. These are interactive sessions, exciting trading, and we teach what we trade and we trade what we teach. Watch us make real trades and real setups using real money. By the way, we also use sim accounts to by law we have to show our sim accounts. We're not allowed to show you our real trades, but we do discuss our real trades. We do talk about them. We tell you what we're going to trade in real as well. All right. If you have any questions, get them answered in real time here. We actually have the longest running trading room since 2010. Since 2010. Okay. So I think it's a pretty good system that we have. And folks, I'm going to ask you here that the the cost for the trading room is only $6.99, and just kind of trying to take this one little piece off. Okay, it's not going to work. Um, the question is, can you afford not to subscribe? $6.99 for 3 months. And I'm going to tell you how to get it. You can go to our website, but you're going to end up paying more than the $6.99 for 3 months. All right. I think this is an introductory kind of a thing. So what you want to do, by the way, if you get this for the $6.99, I understand they will grandfather you as long as you stay in the trading room. They will grandfather you this, on and on. So, but what you have to do is actually contact customer service at daytradespy.com, and get in touch with them and ask them for the best rate. Okay, tell them what service you want, all three if you want, all four, whatever you want, and and then and then ask for the best rate. All right, I think it's really important to do that. All right, I am going to take some questions here. Bear with me for a second. All right. Okay. Helio, I am going to take down your questions. Okay, so get in touch with customer service. Now, once in a while, things will slip through the cracks, and it turns out I had a client here or somebody who's online. I'm taking questions here, right? Who had this problem. So, if you do not get, okay, look, if you don't get good service with customer service, drop me an email. My email address is hughg@daytradespy.com. hughg@daytradespy.com. Folks, do that as a last resort. If you cannot get any response from customer service on a timely basis, then contact me. Okay, I don't want to have you contact me first because it's only, I'm gonna have to contact customer service anyway. I'm trying to get you there as fast as possible. So, but if you're not getting some kind of clarity or quick service or something happens, then contact me. So again, Hugh G. So that's HUGHG at daytradespy.com, and I'll see if I can pull some strings over there. Okay. All right, let's get to some questions. First, the 2-minute tutorial. All right, we're gonna do our 2-minute tutorial. How can you superimpose option values and other indicators on price charts in Think or Swim? Okay, so this is a question that comes up every now and then, especially in the trading room. And I'm going to go back and show you that. All I have to do is bring up this chart. So let's say you have a price chart right here. Okay. The bottom is the time. And over here on the right is the price, And what is this? Is this the price? Is this the price chart? Okay. Hang on a second. Okay. Oh, yeah. I think I got a little something messed up here. I got a percentage. I want to do this auto. I got to get the price in here first. Price, let me go style. I have to set it up here properly first to show you. All right, settings, settings. All right, price axis, auto, percentage up. Why am I not getting the settings on the stock? Okay, what is going on here? Bear with me here. Show order, show studies, synchronize. This is kind of strange, interesting here. Okay. I know what I'm going to try something different here. So I'm not getting what I'm getting on the side here is not the stock price. I'm getting a percentage auto auto highs lows. Use log scale. No, not as a percentage. There we go. This should do it. There we go. Now I got the price on the right side, time on the bottom. So let's say I want to put the option price. Let's say I want to take a look at the 600 strike price that is going to expire on Friday, December the 6th. I want to superimpose that on the stock. Okay, superimpose that on the stock. Maybe I want to go back in the history here to see where the stock, where the option went. Well, let's just do one step at a time. All right. This here is the stock. Okay, let's just zoom out. This is a 5-minute chart, 1-minute chart. Let's change this to, say, a 5-minute chart. Not that it really matters. During the option, during the market open, that's the gray, the dark gray in the background. Light gray is during off hours. Just to get a few less candles, I should say. Let's do a 5-minute chart instead of the 1-minute chart. So if I do a 5-minute chart, so each of these candles represents 5 minutes in time. Okay, each of these represents 5 minutes in time. All right, so I want to superimpose, say, the option price, the 600 call options. I right click and I go down to studies, add study. I'm not clicking on this. I just put my cursor on it. Wherever you see an arrow here, that means there's another menu in behind it. So don't click on it, just put it on here. Then you get the other menu. I'm going to go down to compare with custom symbol. And in the field here, I'm going to punch up the symbol that I'm going to compare with. So the option code is what I'm going to punch up. And to do that, you start with a period, and then the stock symbol, which is SPY, and then the expiration date starting with the year, which is the 24th, and then the month, which is December, that would be the 12th month, and then the expiration day, which would be the 6th of December, so 06. C for call, P for put, and then the strike price, and I said the 600. All right, so you got that, folks. Start with the period, the stock price, the stock code, which is SPY, then the expiration date, starting with the year, month, and day. C for call, P for put, and then the strike price, which is 600. Click on OK. I get this purple line. That is where the option is, as the option tracks, right? The option tracks the stock. And over here on the left is the option price. Right here is the option price. So you can see how the option price tracks the stock. It stops right here. This is on Friday. Why does it stop there at 110? Well, that's when the option stopped trading. The stock market officially closed at 1 o'clock. SPY continued trading. The options continued trading till 1:15, and that's when the purple line stopped, actually at 1:15. When you see the price at the bottom here, that's the start of the candlesticks. So if you see here at 110, that's the first 5-minute candle. When it finished up, it was 5:15. That's when the option stopped trading. Of course, there's the post-market activity. That's what you see here later on. So if you want to superimpose, say, another indicator, let's say I want to superimpose the VIX. Some people like to follow the VIX. I don't know why, but you can go to add study, compare with, and go up here back to custom symbol. Let's put the VIX up there, VIX. That is the volatility indicator. We see that now on the bottom. And here's the percentage of the VIX on the bottom here. There's that blue line that's going in relation to the volatility. That is how you can superimpose on the stock. Now, why do we have? Look at that. To see what happened was the candles here had pushed in so much that they flattened out. I think if we yeah, so I think what we need to do, if you want the VIX on there, probably should take off the let's take off the option chart. If I put my cursor on the purple line, right click, and I think if I edit study, remove the comparison line. Do you want to remove it? Yes. There, now it is now gone. And I just have the price. I want to remove the VIX as well. Right click on the blue line and remove the study comparison line VIX. There, now it's going to be gone, and I'm left with the option or the stock price rather, right? Should be the option price. What happened to the option price? I think we sort of lost the thing there with the percentage. There we go. And now we have um, auto zoom. Now we're back to the stock price of SPY, and that is how you superimpose the another indicator on the stock price. All right, let's get back to our fireside chat. Now that we're into December, I thought I'd change our background to a fireside as we delve into the questions. So let's get into some of the questions. And I don't want to keep you guys all night here. I tend to go a little um, later into the evening when I have these, and I always say every week I say I'm going to wrap it up at 9 o'clock, and before I know it's 9:10, 9:15. So what'll happen in the market tomorrow now that Biden pardoned Hunter? I don't know. I don't know. I actually haven't followed the news on that, Phil. I'd like to see what's going on with that. I don't think much is going to happen, to be honest with you. I think that's in the past. That's not going to affect the stock market. You know what affects the stock market? Interest rates. The market is very sensitive to interest rates, and anything that's going to affect interest rates, the economy, that is what affects the stock market. Okay. All right. Okay. So here's a question here. Say you say, so you say buy the first 2 minutes when the bid-ask spread tightens up, but then you add in the 1, 3, and 50-minute charts. Well, it's the 1, 5, and 50-minute charts. How about some bullet points on using them? Well, we have that on different strategies. Okay, so we have this thing called the bread and butter strategy. That and again, that's we're not giving you the strategies here, but say the bread and butter strategy is a different one that does incorporate the other longer term charts. Basically, there, what I'm doing is I'm looking at the longer term trends, but I'm triggering off the 1 minute chart on the 1 minute on the bread and butter. The pick of the day is and the day trade spy signal, which is based off an algorithm. But the pick of the day, this is a strategy that statistically works incredibly well. Okay, statistically. So if you buy it at say it's a again a call option, the market opens at 9:30. The bid-ask spread tightens up. Okay, so it's established its price, and you see a green candle forming on the 1 minute chart. You see it pushing up, pushing up. I gotta get the candle here in the camera. Pushing up, pushing up. Buy it right then. What we're saying is that, according to our model, at some point you're going to get your 6% gain, probably in the next few minutes. Looking back at our trades in the last few days, I see the pick of the day has come in oftentimes in 1 or 2, 3 minutes of buying the option. So that strategy works extremely well. So that's a statistically proven methodology with which we trade. So you don't actually have to even look at the 5 and the 15-minute chart for that. Just look at the 1 minute chart. What we're doing is we're anchoring it in time. What we're saying is that, it's anchored in time. So you buy it at this point, and at some time in the next, day or 2 or 3, it's going to go and give you the move. That's what we're saying. And it's been working extremely well. All right. Can you plan a session during the trading room covering repairs? Okay, Monty, we should probably look at that. We should probably, and I used to do this a long time ago, where I would actually execute a bad trade on purpose just to show you how to repair it. I will make note of that. And Monty, if we do forget, or even if we don't, let's remind us in the trading room, and we'll do some repairing trades. Um, and that next, have you ever been assigned with SPY? No, I have not been assigned with SPY, but about I want to say 10 years ago, I had a client who actually was. He was very nervous about it, and it was on the Friday, of course. And I can't remember his name now, but I thought, oh, geez, you're assigned SPY, and let me tell you, you don't want to be assigned. Okay, he was assigned, and I don't know how many. I think he only had 1 or 2 contracts, but he had enough money in his trading account to make a difference. So when they assign you, they say, okay, we're going to give you 100 shares of SPY. Let's say it's valued today at $600. So 100 shares of SPY is going to cost you like one option, 600, 6,000, $60,000 worth of SPY stock. But they don't take 60,000 out of your account. They take, say, 30,000 if you've got a margin. They take 30,000. Even if you have the 60, they'll still only take 30, and then they lend you the other 30. All right. You see, this is where the brokers really make their money, by lending you the money to buy the stock. They charge you interest. That's really where they make the money. The commission is secondary. So so you are assigned to the stock. Now, if the stock goes up the next day, you can cash out and make your money that way. If it goes down, you'll just want to hold on to the stock. So SPY is probably going to be fine if you're going to the upside. If you're going to the downside, I would be a little nervous about that, because if the trend is to the upside with SPY, you don't want to be going against the trend on that. Okay, so you don't want to be assigned. I am not assigned. I usually I watch it. Options trading is not a strategy that you can just kind of set it and just forget about it. Okay, go away, forget about it. You really need to pay attention to the option. and actively trade it. You have to watch it. So you want to make sure you're not in a trade come expiration. Now, the other thing is this: brokers have the right and the exercise. I've been exercised this a couple of times in the last several years where I believe after, I don't know if it's 2 o'clock or 3 o'clock, they can actually close out your account if they don't think you're watching it. Usually, what they'll do is they will send you an email saying, "Hey, pay attention. Are you watching this? If so, click on this link. Let us know you're watching it so we don't have to do anything." And if you don't click on the link and you don't tell them you're paying attention to this thing, they will probably, possibly close out the trade for you. So that's the safeguard in there. Okay, so. Okay, another question here from Tim. Tim, good evening, Hugh. May I please check if last Friday's trades were intentional to have December the 4th as expiration? Because normally you select Fridays. Okay, so we did. Okay, so yes, that is true. So Tim, we have been actually trading some trades with a shorter expiration time frame. Aaron he kind of likes 2 or 3 days out with his expirations now rather than next Friday. Personally, when I still trade, for the most part, I will still trade next on a Friday. I'll trade next Fridays. What I did on Friday for myself, um, I did trade one for the 3rd of December, which was the Tuesday, and the others, I believe, were probably the same. So I did do that just to see how the risk reward works out. For safety, I will generally trade on Mondays, Tuesdays, and Wednesdays. Mondays and Tuesdays, I will trade the same week expirations, and then on Wednesday, Thursday, Friday, I will trade the following Friday's expiration. All right, so. All right, so another question here from Dave. Uh, okay, I'm just reading here. Okay, concerning support and resistance, if I'm reading this right, how do we find pre-market resistance and support levels? Generally, I will look at the bodies of two or more candles as a support or resistance levels. The closes on the bodies and the opens. All right, I kind of try and ignore the wicks and the tails because you can have a spike, right? It doesn't necessarily mean it's going to be strong resistance or support. Also, I may look at things like strike prices or exponential moving averages or pivot points. So there are different ways of determining support and resistance. But usually in the pre-market, when I look at the support and resistance, I don't go back very far, maybe an hour, a half hour to an hour and a half, depending on where I can find that support and resistance. So if that makes any sense to you. In the trading room, if you're in the trading room, ask the question there. We'll specifically look at that chart and I'll show you how we came up with support and resistance in the trading room for that particular day. So, question, do we offer any one-on-one training? Eugene, we used to, and we kind of got away from one-on-one training because when we in the latter part of that sort of thing, we just got so darn busy that it became more than a full-time job. So we don't do one-on-one training. But what I would recommend is to join the trading room because that's the most economical. If you were to do one-on-one training, it would be very expensive. If you really want to do one-on-one training, please email me, and we'll see. We'll see. Okay, but as a rule, we just bring people to the trading room where where there's a lot of interactivity. You can ask questions, and we answer them. Try to get to most of them. I can't guarantee we're going to answer all of them, but try and get most of them. And we do our training in the trading room. Okay, that's kind of where that goes. So. All right. Any more consideration to a 2-day workshop? Um, I'm not sure what the two, Ken, I don't know what we're talking about for the 2-day workshop, what that one was, what that entailed. Maybe I missed that time. Maybe it's something that Aaron was talking about. I'm really not sure if you want to expand on that. Let me know. But right now, I'm not really familiar with what you're referring to. We just finished uh, I think it was like an hour and a half workshop on chart patterns, which went really, really well. A lot of people really enjoyed it. As a matter of fact, the next day in our trading room, somebody invoked the chart patterns that we talked about, and he made some pretty good money. So, okay, yes, yeah, and in the trading room, we're gonna look at repairing trades. That's we're gonna be doing that. Hope to do it next few days sometime, right? So, all right, okay. Okay, I think that a buyer of an option cannot be assigned. He has the option, but not the obligation. That is true. The seller of the option is the only one risking to be exercised. That is true. If you sell the option, that is the one you could be exercised. If you buy an option, oh, that's right. So if you buy let's say you buy a call option, right? You buy a call option. If you do not call your broker and say, I want to convert my option to stock, and it goes to the end of the line here, you simply it just simply falls off the off the board. So that's kind of the thing there. So more questions here. Oh, right, 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 right. Yes, yes, a live training. So that's what we're talking about, Thomas. Yes, a 2-day live training. All right. So yes, okay. So the consensus is that yes, we are going to. I believe. Okay, it's not official yet, but it looks like we are planning. The powers that be over at Eagle, the Eagle people, are going to be planning a 2-day live training event. I think it's going to be well next year sometime, obviously, and I believe it's probably going to be in the spring. I'm thinking here possibly March, and I don't know if it's going to be in Orlando or not. I can't promise you that, Thomas, but we are going to be somewhere at an American city where we're going to do a live two-day event. I know a lot of people really wanted that, so that's kind of what we're leaning towards. And we'll give you the details on that later. And watch your emails. There'll be a lot of promotion going out for that. As soon as I get the word exactly as to what we're doing with that, then I'll be able to let you know. Okay, the details on that. So that's coming up. Thank you all for your input on that last week. That was really good. I know that. Where did it go? Hang on. What did I do here? Well, okay, let's get back to this here, Karen. All right, so that was actually very, very exciting to hear those comments, and we like to meet our people as well, and that'll give us an opportunity to have some sort of one-on-one time with you as well. Not sure what it all entails. They're even talking perhaps a dinner. I don't know if you guys want to spend any time with Aaron and me, but after the session, we'll see what happens. So. But yeah, watch your email for that, Richard, and everybody else. And question, is it going to be in Los Angeles? I would say probably not. Probably not Los Angeles because of the time change, at least not originally. Not originally. The time change is 3 hours, and we're going to be doing some live trading in that 2-day live workshop. And I think you probably don't really want to get up at 5 in the morning to do that. So at least the first one was probably going to be somewhere on the East Coast somewhere, I'm guessing here. So Oklahoma City would be nice too. Yeah, we could do. We could. I'm not sure yet where, but we'll definitely look and get. We'll see what the bosses all say. So, all right. Well, folks, I think it is now 9:03. I'm going to wrap it up here, and uh, my wife just informed me that she's got a pie coming out of the oven. So I think that's her way of luring me down to share with her a piece of apple pie. So with that, where did that one thing go? Here it is. Okay. Thanks for joining us. All right, folks, the recording will be out shortly. Been a pleasure. We'll see you hopefully tomorrow morning in the trading room. Hey, everybody.
There ain't no stopping now. You're the one. Shine brighter than the moon and the sun. Be great at what you do. Give it all of you. And trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have.